Hello everyone, welcome to another technical analysis of the Forex markets. Today we are going to explore multiple patterns that may emerge and some of them already formed, so let's dive in. For the Dixie, for the dollar index, we have a very sharp pattern completed, indicating a possible pullback. This pattern suggests that the Dixie may drop back to 104.95, so let's keep an eye on this pattern. We have the cable remains within an established range between fractals, 126.75 as resistance and 126.21 as support. We have projected patterns at 25.80 as mentioned in my last video. You can also check out this previous video through the links in the description and the links above in your screen. Then we have the euro versus the dollar. Found support at 106.66. We have resistance at 107.61, which could act as a neckline for a potential double bottom. So this level will be crucial to monitor during the week if we start to approach those levels. Let's jump into the Aussie. It looks like so we have before going further, we have signs of bullish hidden divergence, and eventually we are forming, and it looks like we are forming a triangle. So we are in the middle of this consolidation triangle. However, we have an intraday range between 66.69 and as resistance, of course, and 66.25 as support for the Aussie. Then we have the Kiwi managed to stay above the support established 2 weeks ago at 60.96, and we have resistance between 61.34 and 61.48. We have also patterns projected below support at 60.18 at the golden Fibonacci extension level. If the price falls below these levels, we will pay attention to this price zone also for the Kiwi. Then we have the Aussie versus the Kiwi. I mentioned the bearish alt-bat pattern projected at 108.47. And since then the pair has started to pull back, so we have a new fractal at 08.91 actually, and the default target for that pattern, as always, it's a 38% Fibonacci retracement. In this case it's projected at 108.23 for the Aussie versus the New Zealand. The dollar versus the Canadian. We are now threatening the daily fractal support level, which was established at 36.70 after failing to break the previous highs at 38.46, or after failing a retest, not breaking, but after failing a retest of these previous highs. We have the weekly fractal resistance now adjusted at 37.91, so the previous highs, and we are now watching for potential bullish patterns that may form at 35.70, 74.75 if the price falls below this fractal support. So we are now threatening the daily fractal, as you can see, at 36.70. A drop below these fractals that will favor more downside, but I will also pay attention to the formation of patterns that will start to emerge at these previous support levels. Let's jump into the dollar versus the CHF. Good recovery last week, despite not forming the anticipated pattern projected at 88.10 at the golden Fibonacci extension level. It formed a new fractal support at 88.25. We are now watching for the weekly fractal resistance at 89.93. The previous structure highs, reinforcing this resistance could help form reversal patterns, particularly the possible or eventual inverted edge and shoulders pattern, which means we expect at some point that level to act as a barrier of resistance again, and the price needs to pull back again to form these right shoulders. So we are far away from that pattern to start to emerge, but this is one of the possibilities. I want to see how the price will react to this previous resistance level. If that starts to emerge, we have something to pay attention to for the CHF. Now let's go to the Norwegian krone, navigating within an intraday range with support at 10,495 and with resistance at 10,590. That's an intraday range. In particularly interested in a drop below these the multiple support levels, the daily fractal support and the weekly fractal support, which could lead to the formation of a bullish butterfly pattern, which is projected at 10.33 initially. So this is my first level of attention for the Norwegian krone. Let's jump into the Mexican peso, approaching a cluster projected between Fibonacci levels. Major 38% Fibonacci retracement appeared just below today's lows, actually the most recent lows, at 17,951, so 1795, let's say, and converging with the 127% Fibonacci extension level, 1797. The euro versus the Aussie, it threatened to break the monthly fractal support level positioned at 61.20, but we have a new fractal support at 60.25, so watch for a potential retest of this daily fractal resistance at 62.62, and as reinforcing this barrier could turn this fractal into a neckline for the potential edge and shoulders pattern formation. So very similar to the previous analysis. So we expect a reinforcement of this resistance, and if that happens, we will pay attention to the formation of this eventual right shoulder. Let's move forward to the pound versus the Aussie. It gives a sequence to the edge and shoulders pattern mentioned earlier, and formed a new daily fractal support at 89.54. So it's now approaching the intraday resistance. We are now threatening the intraday resistance at 90.65. After the formation of this bullish butterfly pattern at the 900s, let's say. Finally, with the pound versus the New Zealand, we have support at 205.98, with a range established between intraday fractals at 06.93 and 05.73 as support. I'm paying attention to a potential drop below this fractal support level, which may help forming patterns at this golden Fibonacci extension level. Of course, for that pattern to emerge, we need to see a broken support level. If the price breaks above this resistance, of course, that sequence will no longer make sense. Of course, it will no longer be possible to form this harmonic pattern. So that's it for today's analysis. I hope you found this helpful. Don't forget to like and comment and subscribe to the channel, of course, for more analysis and updates. See you the next time. Have a nice trading week.